because in March, actually, Fed was not even thinking about tapering, and now Fed is talking about tapering. So while the message delivered last week was more hawkish than it was told in March, it shouldn't be too surprising to the market. In fact, I mean, if you look at the vaccination has accelerated since March, and growth has picked up, and you have a labor market has begun to improve. Both inflation and inflation expectations have risen as well. All that have given the committee increased confidence that the economy is on a very good path, which means that the policy accommodation we have right now may not be necessary as quite long as previously thought. So this means that both tapering and rate hikes seem likely to start somewhat sooner than they thought in March, although both remain conditional on continuous progress towards full employment and price stability. So I do think it's fair to say that Fed right now is talking about tapering. So what does that mean for rates? It could mean probably slightly higher rates and a slightly more steepened curve. And that's actually continue to be a very supportive environment for the carry trades.
Indeed. And do you think that the steepening of the curve will be in a gradual and controlled manner that the markets can easily adapt to and sort of reposition without any major disruption such as a tantrum?
Yeah, exactly. I think when people think about tapering and they associate that with tantrum, right? Because I think a lot of the market participants are probably traumatized by what happened in 2013. And at this time, if you really listen to the Fed chair, and he specifically pledged to give sufficient advance notice to the market in terms of the communication so as to avoid a taper tantrum and to manage market expectations. So I would think that so it's likely that they probably started to talk about tapering in Q3, Q4, and then communicate with the market by year end on the timing, the real timing of the tapering.